Are you an e-commerce business owner who feels like you're spinning your wheels when it comes to finding the right funding options? Well, don't worry, you're not the only one to feel this way. There are so many different types of financing out there for e-commerce, and it will get confusing and overwhelming in a hurry. But in today's video, we're going to cut through the noise and help you make sense of all of your funding options. We're going to be discussing everything from traditional business loans to venture capital funding to alternative loan solutions. So if you're looking for a way to get your e-commerce business off the ground or take it to the next level, stick around because this video is exactly what you've been looking for. So as a preface, there are a ton of different funding options out there for e-commerce. So to make sure this video isn't 4 hours long, we're only going to briefly discuss each option and give kind of an overview of what may be the best solution for you. If you're interested in learning about any of these options in more detail, I've linked our blog posts on this subject in the description below. So funding e-commerce option number 1, bootstrapping, aka using your own money from savings or personal credit cards. Now this is less than ideal, but this is probably the most common option for startup businesses. Now on the plus side, this option does avoid taking on any additional debt or giving away equity in your company. You get to maintain complete control over your business. However, you obviously must have a large sum of money to use as starting capital. This is also going to greatly impact your credit score if you rely on personal credit cards to get started. You could end up putting all of your savings into the business and lose tremendously if anything goes wrong. Not to mention the fact that scaling your business can get challenging if you only have enough funds to get it started and aren't seeing a lot of profit coming in right away. Now, funding option number 2, friends and family. Now, first and foremost, with this method, you clearly want to lay out the terms with the friend or family member. Is it a loan that you're going to repay them? Is it a gift? Is it an investment that they're going to get a percentage of your business or profits? If it's a loan, lay out what the repayment terms are going to be. This is going to help you keep the relationship intact and not put any financial stress on them. Now, a perk of asking friends and family is that they may give you more flexible terms than a traditional lender would. However, disadvantages. Exploring this option can easily strain a relationship. It's reported that nearly 40% of relationships end due to money-related issues. Money is an incredibly touchy subject for people, and if a loan isn't repaid promptly, you could ruin that relationship with whoever lent you the funds in the first place. Your friends or family may not have access to that kind of cash. Your friends or family could feel uncomfortable with you asking for money, so there's a chance that they could just flat out say no. So you gotta decide, is the juice of this option really worth the squeeze? Option number 3, term loans. So this is probably the most popular and traditional funding method. Typically, the loans require collateral, so either equipment or real estate. Sometimes they also include a lengthy application process and high interest rates are often involved. Now we're talking many different types of loans, like SBA loans, the 7A loans, micro loans, disaster loans. You could try direct lender loans from establishments like Bank of America or US Bank or Wells Fargo. There's equipment loans, which helps you buy only equipment for your business and not get hung up on other expenses, which will give you a little bit of better control over that loan. So term loans are attractive to many e-commerce business owners because they still don't take equity from the company in order to fund. Loan terms are usually fixed, so you know exactly how much you're paying back each month. Sometimes you can even work some magic and get a lower interest rate compared to other options that we're going to talk about in a minute. However, there are still downsides. As I said before, a lot of times traditional loans require collateral in order to secure the loan. You're literally sacrificing something of yours just to get the funding in. And number 2, the application process can be so time consuming with a large risk of just flat out getting denied. So you're putting a ton of work in and getting no funding out of the deal. Option 4, crowdfunding. Now this option is getting to be more and more popular for small businesses. Crowdfunding allows you to gather small donations from many people through a crowdfunding platform. Now depending on the terms, you may not even have to pay back what you get from these platforms. And benefits also include that this can be used to test the market to see if your product will be successful without investing a lot of your own funding. Typically there's no upfront costs or debt involved. You can gain capital, brand exposure, and customer feedback, which is incredibly helpful when you're starting a business from scratch. However, those drawbacks. Reaching your fundraising goal may take a very long time and extensive marketing. Supporters of the crowdfunding may expect to be paid back or given something in return for their donation. There are also a lot of rules to follow on crowdfunding sites, and they vary from platform to platform. So if you don't follow those rules, you get your campaign shut down before receiving a single penny from it. Option 5, grants. Now, this is more than likely many business owners' favorite because it's money given to the owners without having to pay it back. They're typically awarded on a competitive basis and can be given through private, government, or nonprofit organizations. So the advantage of this type of funding is obvious. They don't have to be repaid. Often they come with additional resources like research or training, and can many times come with mentorship opportunities. Now, the drawbacks: the grant application process is incredibly complex and even more lengthy than traditional loans. Charity Science shared in a report that the typical foundation grant application takes between 15 to 20 hours to complete, and the average federal government grant app can take over 100 hours to complete. Very strict criteria to qualify, not to mention these are highly competitive. GrantWatch estimated that 1 in 7 grant applications are approved, which is roughly a 14% approval rate. Option 6, business credit cards. Now, in case you haven't guessed, this is our favorite option here at Fund&Grow. Why? Because it combines all the best parts of these other options without the drawbacks. Business credit is readily available for startups and seasoned e-commerce businesses. They don't show up or impact your personal credit. There's no collateral or giving up equity in the business in order to get it. They have 0% interest options for anywhere from 6 to 24 months. They can be used for any business expense. You don't have to tell the bank what you plan on using the funding for in order to get approved. Business credit cards also have rewards and cash back, so you can get paid for using them. And they're easy to apply for. You can fill an application and get a decision the same day. So they are truly a viable option for e-commerce business owners. Now, even though I just got done saying, hey, these are so easy and wonderful to get, if you want to learn the best tips and tricks for accessing business credit, however much you need to grow your e-commerce business, you're going to want to check out the free masterclass in the description below, and we'll get you on the right path to funding your business dreams. And those are our options for now. So I hope this video has been helpful to you. If you've got any questions, comments, success stories, feel free to drop those below in the comments. If you haven't already, please like and subscribe so you can get plenty more information on options out there to help your business grow and achieve what you're looking to achieve out there. On behalf of everybody here, I'm Zach Ritchie. Thank you so much for joining us here at Fund&Grow, and I'll see you in the next video.